Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. I've got breaking news. We have an emergency situation in Kazakhstan right now. I will give you those details before we get into the depths of this video. The first thing I want to look at today is the commodities and droughts and how that relates to what you pay at the grocery store and more. The second thing is the markets are seizing up. That's not my wording. It's actually from Bloomberg, and this is very true. I've talked about this as it relates to the commodities and derivatives markets, and I'll show you that. The third thing is the crack to the US economy. What's going to break its back? I will show you all of that and more. Let's begin right here. So in Kazakhstan right now, by the way, this situation is developing very fast. So at the time of this recording, by the time you actually see this, it's probably 24 hours later. So much has happened, but take a look down below in the description. You can get the sources there for yourself or search it out. Just search Kazakhstan and you will see. So it looks like the people, they're protesting, they're trying to boot the government out. There's so much happening. I will give you more details as it comes out. The city hall is on fire. There's videos there. I mean, there's people going, I believe they took the airport over. There's a lot happening. So I'm just showing you this. Local mayor's office. I mean, all kinds of stuff. Okay. So that's big. I believe it's important. But on this channel, what I like to show you is not the political aspects of any of this, but how it relates to the financial side. And this is real key. Kazakhstan is the by far, number one producer of uranium. And guess what happened? As soon as things got real hot and heavy, of course, the price of uranium and the stocks that are related to that have simply shot through the roof. So this is so key to understand. I talked about Kazakhstan and when uranium was really getting a lot of attention last year, I was bringing this up. So right now, those prices have gone way, way beyond that. There's, physical ETFs based on uranium and so on. So there's a lot of attention here. So watch what happens with Kazakhstan and take a look at the price of uranium and those stocks. So this is what I wanted to really start with today. This is talking about Russia as it relates to commodities. How Russia's war in Ukraine is choking the world's supply of natural resources. So essentially what they say in here, and I'm not going to go through all the details, but there are a lot of charts. So if you want to see them or anything else, go down into the description under the sources. It's all there for you. But essentially, Russia has a lot of everything, it seems. They output a lot of different commodities. And so what I want to say is that if you cut Russia off, if you say, you know what, we don't like what you're doing, we're going to stop importing stuff from you. That's going to reverberate and create a shockwave across the whole world. Really, really. And they just get into all those different examples. Russia's commodities reach the share of Russian exports that go to each destination. And it's just showing you palladium, platinum, and coal and gas. I mean, depending on which region. But we know there's a lot. And these other countries, like an example of Brazil, they're importing. So Brazil, let's say they're a good partner to US, let's say. They're sending a lot of stuff to US. And let's say Brazil and US, they're on good terms. But now, if Brazil says, oh, we're going to cut off Russia, well, they're importing the fertilizer. So suddenly they don't have that fertilizer. They don't have that product. So that impacts the US indirectly. So you see how there's that chain of events, that domino effect. So always be mindful of that. There are indirect, that people can't, no, I see that a lot of times. No, it doesn't affect them because of this. But if you just take it one step further, you start to realize, okay, I'm starting to get this now. So like I said, there's too much in here to go through it all. But you could see Russia is the second biggest crude exporter. Second biggest, okay? Looking through here, you could see who's buying it up. China number one, Germany number two. Go down further, biggest exporters of gas oil and diesel. Russia's number 2. It's talking about natural gas, number 1. Go through that. Pipeline gas, it's mostly going to EU. Obviously, Germany is up on the list. LNG, coal, there's number 3. I mean, just go through it. Food, they've got the wheat, they've got everything. Okay? That's all I wanted to say about this. I don't want to give you all the little numbers and details. I think it's insignificant, but you can see that for yourself if you're interested. Soaring prices for everything used to make food brings more inflation. So essentially in this article, they talk to different farmers and so on, and they're saying, before, I believe it's somewhere down here, oh, this used to be, costing right here, $700 to $850 per acre for the corn and the soybeans. That's what it would cost. Now the expectation is $11.50. And so, yes, if prices go up, that may offset, but that's an issue. Look, because it's not just the prices of one thing going up. If everything is going up, then that's going to hurt the bottom line. And we need that food. Let's be honest. We don't want to outsource everything. We want to have our own local production of food. We want all the components, or at least most of the components that go into this, being as local as possible. But it seems like that's not the case, right? So, of course, what does this do? Well, that puts a lot of pressure on you, the individual, because now more of your income is going to the things that you need, the food, the energy, and so on, and the housing. Rental prices in, Miami or in Florida were up 39% year over year. I mean, everything is going up like crazy. And then you've got this on top of it all. Spring outlook, drought to expand amid warmer conditions. Flood risk for the upper Midwest, and the Southeast. So you're seeing this huge change that's happening, and it's all over the place, really. Droughts in some areas, floods in some areas. And what does that mean? When you've got an area like California that has a lot of the commodities coming out of it, a lot of agriculture, what does that do when suddenly they say, didn't work out this year? Well, that means, number one, for the produce that is available, the prices go up. But now other places are saying, we need another supplier. Well, maybe that supplier is further. Maybe it's Mexico. Stuff's coming in further. Number one, probably not as good, but also it's going to cost more. Transportation costs, oil has gone up, gasoline has gone up, transportation costs, the labor costs have gone up. Everything. This is a problem. This is a big problem. So you look at the flood outlook as well, and you go on to see this. This is a website called Drought Monitor, just showing you the different areas. Obviously, you're going to see some places, let's say California, if it's usually having dry conditions. Sure, that's fine. But what if it becomes so persistent that it's an issue for growing the crops that require a lot of water? Then we've got a problem. That means you pay more for food. That's why I tell everybody, get your food situation in order. Get the beans, get the lentils, get the rice, get the pasta, the storable food that stores there. Maybe you don't even want to eat it. You put it there, you store it in a cool, dry place, you package that properly so that it will stay for a long period of time, and you can just forget about it. You never know when you might need it. All right. So let's talk about the markets seizing up. I did discuss this in a previous video, but I want to expand on it a little bit here. The world's biggest commodities markets are starting to seize up. Buying and selling is becoming much harder as liquidity slumps. Traders are exiting key commodities amid wild price swings. This is big. The prices are going up like crazy. Some of these ETFs are betting on the price to go down, and they're just getting crushed. obviously, for obvious reasons here. So they're talking about what happened with nickel. Nickel price went up so considerably in a short period of time, and they had to halt trading on it multiple times. It was out, just there was no trading for a week. So what is that? What happens? As soon as they open the market up, you see people rushing for the exits. Okay. Merchants are finding it harder to snap up any cheap cargoes because of huge margin calls and credit line caps. Watch out for that. Volatility as an asset is enormous now. On top of that, you have some serious operational issues. It's a vicious loop where volatility forces companies to reduce positions, which means what's left in the market is forced trading. That in turn contributes to even more volatility. Okay, you look at all of this. I really wanted to take my time and go slow on this article, but I'm going on real long here. This is talking about nickel. I know a lot of people are aware of what happened already. Just understand that it was shut down for a period. Liquidity is drying up in all different types of commodities at this time. LME is dealing with this. You look at different commodities exchanges and so on. They're all encountering a problem. Let's just say that. Traders say that the gap, they talk about this here. The gap between the bids and the offers on aluminum spreads, flares out wildly. So this is what's happening here. When there's always a bid and ask. There's, what you're willing to buy it for, what you're willing to sell it for at any given time. And what happens when that spread is massive? You say, I've got this, whatever it is. I've got this stock. I've got this NFT. I've got this piece of gold. I've got whatever. Real estate. And it's worth, X price. But that was based on what? On comparables. But now what if things got real wacky? Well, you say, well, I'll just hold on. But when you hold on to that asset, how long? Is it a week? Is it a month? Is it a year? Like how long? It depends on the market, depends on the conditions. But when you're in that period of waiting, what happens to that asset? A lot can change. A lot can change. So there is so much in here. I just don't have the time, and I'll rant on and I'll mess it all up. Check this article out if you can. Okay. You're just looking at margin calls happening, cracks appearing within the commodities and derivatives markets right now. Okay, big time problem. China put can be a game changer for the stock market after the global rout. Stimulus as well as loosening vows may give Chinese stocks haven status. So what we're seeing here is that I believe it was the vice premier of China basically said, we are not going to crack down as hard on the tech stocks. And that immediately sent the tech stocks soaring in China, as well as you see a lot of different stimulus. They're going in the opposite direction of the Federal Reserve and other central banks. So they cut their reserve requirements for the banks. They're, it looks like they're cutting interest rates as well. They're trying to make it much easier. So that could be a place where money starts flowing. So money may leave the US and Europe and different places and may find its way into China. We will see. Charting the global economy, Fed lifts rates as inflation builds. Just to look at what has happened here over the last while, we know it is very clear what's happening. They're struggling right now with inflation. Just looking across, here. These different companies, Maersk and others, the shipping companies, they control, a handful of companies control the freight, matter of fact. But all of them are experiencing extreme situations. The prices that we pay in terms of transport costs have gone up considerably, and that means you've got to deal with higher prices. Okay, I'll say it a million times. This is one I would call it, I don't like to see this, But anyway, the IEA, emergency measures can quickly cut global oil demand. How do they do that? Well, they give you a 10-point plan. Reduce the speed limits on highways. Work from home. Car-free Sundays in cities. Alternate private car access to roads in large cities. Increase car sharing. It just goes on. And I see this as kind of like the Great Reset and all that. And I just think that there are so many other things that they could be doing instead of this. There's this wild situation that we have to deal with as individuals where, we don't have freedom and liberty, it seems. Oh, but that's too. Be careful now. Be careful. This is on a platform where they don't like that. So that's it for this video. I had so much to cover. This was really 3 videos in one, if you want to think of it like that. I hope you appreciate the information. I went on way too long. So if you do, hit that thumbs up. I'll see you on the next one. Take care.